So what are the rocket boosters that are needed for Starship stocks to hit the stratosphere? To the floor show and our pilots, astronaut Larry Shover. You get this one first.
Well, yeah, for me, it's like the flashpoints from the first quarter aren't going to recede, but they're going to rotate to the back burner, and I think we'll see that. The Fed pivot, for instance, they didn't do it in a belated fashion. It's a mid-cycle constructive pivot, and that's going to help growth. Also, the China trade deal, that was such a big deal, and it still is, but I think there'll be more clarity on that, and that will help normalize data. With all that said, I think earnings expectations will see a growth revival. Right now, their consensus is like 4% growth for earnings expectations. I think that's far too low. We get more clarity on these flashpoints, and we'll always have them. I think it will be off to the races, and we will see new highs in the second quarter of this year.
Okay. All right. I see that. But, Phil, second quarter, we're in it right now. And it makes you wonder as we see your favorite commodity, oil, firming like you just can't believe. What does that mean for anything that might, of course, add rocket fuel to keep that idea going to this market and to people's portfolios, most importantly?
I think it's going to be fine. I think it's a positive. I think if you look at the big spike in energy price, it's really a reflection that the economy is doing a lot better than people thought it would. You know, we saw oil prices sell off hard late last year because everybody thought we were going into a recession. Not happening, and it means the energy sector may be one of the sectors that gets that S&P to a record high.
Yeah, oil right now is up $1.13 in the aftermarket to 62.73. John Corpina, we did get durable goods numbers for February, and folks, durable goods are big ticket items that are more expensive, washing machines, cars, things like that are supposed to last more than 3 years. And it's a very good indicator of how manufacturing is going. And we got that number down 1.6%. It was a miss, but I'll tell you something. No, actually, it wasn't. It was slightly better than the loss of 1.8% expected. Pardon me. What does this say for stocks that people are looking to scoop up on the cheap?
Listen, Liz, I think we've definitely seen the market rise to near highs, but there's certain areas in our market that's still lagging behind. Look at the financials. Basically, over the last 6 months, it's essentially flat when we're talking about an S&P that's up 13% on the first quarter. So I think as we head into earnings season and we kick it off with financials, that always adds a nice boost behind them. So I think investors might be able to get in early enough on those to see the market move higher. But as far as economic data is concerned, you know, sometimes we do get that conflicting information, but what we get Friday is the job numbers. Hopefully you get a revision from February, and that will help our market move up.
Okay, yeah, hopefully. Can't really cash in on a portfolio regarding hope, but great to see all of you guys, Larry, Phil, and John.